Everybody, good morning. General Rush, good to see you, sir. First one in the room. Gaten, Arturo, Serge, David, Frank, Mad, Kathy, Svenborn. How's Iceland doing, Svenborn? Get cold up there yet? Dan, Ed, B, Kevin, Tang. How you say it? Tang or Tin? Tang. I don't know. You can let me know. Kimberly, good morning. Ted, Will, Don, Cliff, Aki, and welcome back, everybody. So, you know, I'm kind of the contrarian, right? Welcome to the Daily Contrarian. I mean, I'm permacautious. Like a lot of people mistake me for bearishness when we're just ripping. It's cautiousness, all right? There's always the potential to just plummet out. And then when we're dropping, I'm like, hey, be careful, we can turn and rip. I don't like to follow the crowd. And so this is the only show I know of that kind of brings you market news with a side of a side dose of reality and a side dose of skepticism in the actual data that we get. So I'm your hostess with the mostest. We're talking about the topic that it's probably about as popular as a skunk at a garden party. Bankruptcies. Now, we've talked a few bankruptcies so far this year. You're probably thinking, bankruptcies are depressing, right? I'd rather watch paint dry. Hold on, though, because while the mainstream media is busy chasing all the hyperscalers, the latest AI-powered gluten-free unicorn dust, I mean, there's a story unfolding on the underbelly of the economy that could spell opportunity if you're paying attention and you're ready to strike when it starts unfolding. But let's be honest. We all love stories. Humans love a good story, especially when it involves a bit of, shenanigans and the potential for a big payday, right? So let's set the scene, shall we? The year 2025 sounds familiar. We've got a government that just came off of a 42, 43 day shutdown, I guess, depending on how you count when exactly they shut down and when exactly they reopen. We've got a consumer who's tapped out. I guess that's the polite way of saying they're broke. And we've got a stock market that's been riding a wave of AI fueled euphoria for a couple of years now. I mean, it's kind of like the party on that Titanic, and no one sees the iceberg dead ahead. We're just cruising full strength. This thing's unsinkable. But the cracks are showing. According to S&P 500 Global, S&P Global, that's the company behind the S&P 500, we're on pace for the highest number of corporate bankruptcies in 15 years. Think about that for just a minute. This party's been going on since the last financial crisis. This year, we're going to have more corporate bankruptcies than we've had in the last 15 years. We're talking about 655 companies throwing in the towel so far this year. And it's supposedly everything's good right now. We still got 2 months to go. Right now, we're more than all of 2024 combined. It's a veritable graveyard of corporate ambition littered with the carcasses of companies that flew too close to the sun, watched the wax wings melt. And for those fallen angels, who were they, you might ask? Well, it's a motley crew. We've got the usual suspects, retailers who just couldn't keep up with the Amazon juggernaut. Forever 21, Rite Aid. Rite Aid filing bankruptcy for the second time in 2 years. And even the iconic Hooters restaurant filed for Chapter 11 this year. It seems that even wings and, well, the other things they advertise can't save us from a retail apocalypse. But it's not just the brick and mortar stores that are feeling the pain. We're seeing bankruptcies in the restaurant industry growing. Chains like Razoo's Cajun Cafe, Abuelo's, they're struggling to keep the lights on. Even the once mighty Del Monte, a name that's been in our pantries for generations. Yeah, the fruit company has filed Chapter 11 this year. It's a sign of the times where even the canned fruit business can't make it in a plethora of SNAP benefits. I mean, the numbers just crazy on SNAP benefits. 200,000 people were collecting benefits that were deceased in just the 21 states that reported. 500,000 were collecting in more than one state in just the 21 states that reported. 29 states refused to give the USDA the numbers. It's kind of crazy. I mean, and then there's more interesting cases. We've got Dr. Phil's TV network. Everybody know Dr. Phil, right? Merit Street Media, they filed bankruptcy just a year after it started. I guess people aren't as interested in getting real as they used to be on TV. And let's not forget Sundance, Robert Redford's beloved creation. It's closing all of its retail locations. It seems that even Hollywood glamour can't save us from the harsh realities of the market. You got to have people showing up at the door spending money. So what's the real story here? What's the common thread that ties all of these bankruptcies together? Well, classic tale of debt, over leverage, changing economic landscape. For years and years now, companies have been gorging on cheap debt. That party came to an end. We were using that cheap debt to fund buybacks, acquisitions, all sorts of financial engineering, creative accounting. But now, with interest rates higher, the economy actually taking a breather, slowing down a little bit. Reality comes a knocking. The tide is going out. We're about to see who's been swimming in the pool without any clothes on or bathing suits. And this is where sometimes great companies go to die. And this is potentially where this story could get interesting for those who pay attention. If you're a contrarian type investor, a skeptic, if you will, maybe you know a guy like that, because while the rest of the market is chasing the latest shiny objects, we can be sifting through the wreckage looking for the diamonds that get left. You see, bankruptcy isn't always the end of a story. Sometimes it can be liberating. It's a chance to restructure, shed the debt, and emerge stronger, more competitive than ever. Think of it like a forest fire, the destructive, chaotic nature, but it clears out the dead wood, makes way for new growth, new forest, new opportunity. And that's where our opportunities can lie. We're talking about distressed debt, where you can buy a company's bonds for pennies on the dollar and potentially make a killing if they manage to actually turn things around. We're talking about bankruptcy restructuring plays, where you can get in on the ground floor of a newly reorganized company and potentially ride it back to the top if it's a recovery story. And let's not forget companies that are actually benefiting from the wave of bankruptcies, the liquidators. These are the restructuring advisors, the law firms that specialize in this kind of work. These are the guys who make a killing when everybody else is losing their shirt. And you can bet, when you take a look at them, there's opportunity, especially as this party continues to get worse. So while the mainstream media is telling you to buy the dip in the latest AI hot stock, I think you should look a little deeper at bigger opportunities. They may outperform anything in the AI sector on a recovery. Look at companies that have been struggling. They've been left for dead because that's where the real opportunity to magnify and get 10x, 20x, 30x returns lies in the market. It's not always for the faint of heart, but for those who are willing to do their homework, take a calculated risk, keep it in check, the rewards can be outsized and enormous. And that's where I kind of leave this today. We'll take a look at some specific investment opportunities in the coming weeks as I find them. But stay skeptical out there. Look at where the opportunity lies. And we'll look at some charts, try to figure out how to make money today. So hopefully you enjoyed that little bit there. Hopefully. I thought it was very telling, though, that we're seeing the highest bankruptcies in 15 years. That's a sign of what's going on, to me. You can't just throw spaghetti at the wall and make it work anymore. So, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you desire personal financial advice, well, you should hire and consult a financial advisor. So be careful out there. I make predictions. Bottom line, I make predictions. Sometimes I get it right. Sometimes I get lucky. I don't have a crystal ball. I got a bag of unicorn dust. This is not organic, I don't think. I think it's made of, I don't even know what it's made of. It's cheap. You can Google it. Friction Labs, unicorn dust. Sprinkle it on the market when I can. So be careful out there. Don't chase those AI darlings. And I work for a publisher, and the CEO of the publishing company posted something in the, we have these interesting ideas, a channel where we throw interesting ideas back and forth in the background with other gurus and, people in the company. He posted this big, long X post about how this is not a bubble because it's based on hyperscaler growth and all this stuff. I was like, I wrote a big, long thing. I was like, for every one of those hyperscalers, there's 1,000 or more startups that are getting investment cash and just hoping that they can find customers. I was like, this sounds just like the dot-coms. The hyperscalers, the Microsoft, Meta, NVIDIA, Google, those aren't the ones where the bubble is. The bubble is in all the underling stuff. The thousands of companies that are trying to make ideas work, that have no profit, they don't even operate at a profit right now. They're trying to get in the door cheap, acquire some customers, maybe figure out the profit later. And there's thousands of those. For every hyperscaler, there's thousands of these projects that are just running on the API, trying to make it work. And that, to me, those thousands of underlings, those are the dot-coms. That's the problem. Those are the people that are giving the hyperscalers money. When the problem happens in the base, what happens to the hyperscalers? Like, that's every time it's a bubble, right? No two bubbles are ever the same. It's always different this time. So I can sit here and see it, but does it explode tomorrow? Probably not. Does it explode next week? Probably not. Next year? Maybe not. It could run for 3 more years before this could be the Moab, the mother of all bubbles. I mean, it's probably going to lead to a paradigm shift. Just like the internet did, right? We didn't think about it. The 90s, most of us were around in the 90s. Most of us, probably not all of us in our memorable state, but 80s, 90s, there was no, the internet was a thing, but you got mail. I mean, you made fun of AOL and things like that. And, but the internet, you didn't go Google something. You went and looked it up in the library, looked it up in the encyclopedia. You didn't, the internet has changed the way we operate. It's hard to think back to the way it used to be. AI is going to do the same sort of thing. What's it going to be? I don't know. Like back in the 90s, we didn't have the vision of what we were going to have now. I mean, maybe some visionaries thought you'll be able to get on your Dick Tracy device which is now an Apple Watch, right? Get on your Dick Tracy device and find out any information you want and contact other people. It's kind of like an Apple Watch. but we didn't really have a vision of how that was going to happen. And so I don't think we have the vision of what AI is going to do. Not really. Even though you got some super smart people making lots of guesses, I think we're going to go through a giant flush out, just like every other paradigm shift ever. We saw Industrial Revolution. There was a big flush out paradigm shift. Internet revolution, big flush out, paradigm shift. Probably be an AI revolution, big flush out, paradigm shift. You got to remove all the dead weight. It's not in line with the new paradigm. The horse buggy industry used to be huge till the motor car came along. So things are going to change. I don't know how. I'll be here as long as I'm here until AI takes over my show, I guess. And this is pretty benign this week. Looks like we got some FOMC minutes. I saw something on Friday that I think tomorrow they're supposed to put out a bunch of the numbers from last month. I'm not for sure on that, but I think tomorrow they're going to put out a bunch of the numbers. It's not on this right here. We'll see what happens. The government ran up over $650 billion of debt while it was shut down. Think about that. Even though completely shut down, not spend anything, they still ran up $650 billion of debt in 40 days. That's a faster pace than $1 trillion every 100 days. Faster pace. Things are getting sketchy out there. So looking at the S&P 500, got us a little bounce there on Friday. Retracing this morning. There's not a lot of tickers on my list this morning. It just kind of a benign start so far. Just a benign kind of thing. This may have a little more room to come down. Want to see it hold here. And then we can take it higher. If we break down lower, if we break these lows, right now we have an uptrend of lower lows. Only 2 does make an uptrend. 2 points make a line. So we've got that. If we break through that, can have a bigger downside, and it's kind of an uh-oh moment. Now, fear and greed on CNN. We were at some extreme fear. And in crypto, see if I still got crypto up. Yeah, crypto, we actually hit right here. We hit the most extreme fear on crypto Friday since COVID. Think about that. The most extreme fear since COVID. COVID wasn't all that horrible for crypto. I mean, it wasn't great, but it wasn't horrible. Go rolling back. Fly back to March of 2022. You have to come down in here. I mean, it wasn't all rosebuds, but starting at the beginning of March, down to the bottom. 50% pullback. I mean, hurts, but it's not. And then we recovered it right back up. So we had that kind of extreme fear on Friday that we saw during the peak of this. probably the peak of this. Yet we're only down like 20% off the highs. 25%, I guess, maybe. Go back over to the current, please. Oh, look at that. Tag the bubble. Right there on Sunday. That could be it. Although it does look like the way this is consolidating right here that we may see one more little oops. Right there. Now, a lot of people have lost hope on this big rally. That's exactly the time when we can do it. Everybody was convinced that we wouldn't retrace, so we wouldn't go below 100,000 right over here. Everybody was convinced that was the floor, 100,000. Can't go below it. That's exactly why we had to do it. Now we've kind of busted the hopium that we can go make this blow off top. And that's exactly what clears the runway for this to come up and hit the target zone. I'm still sitting in with my primary target around 150,000. I still think we can do it. Although it sure has bummed a lot of people out. So be careful out there. This is why I'm kind of like, I'm always the skeptic, right? I don't jump on the bandwagon. Like, people think I'm always bearish when the market's bullish and always think I'm bullish when the market's bearish. It's just, I don't like to follow the crowd because the crowd is always wrong. They can be right for a while, but they're always wrong in the end where we're about to go next. So always be careful out there, everybody, as always. So as far as S&P today, probably going to push down, like I said, into the support. We'll see if it holds. If we can hold it and turn it, probably going higher. If we don't hold the support, probably going to retest a low. And then if that doesn't hold, bigger problems. Still primarily thinking we can go higher into the end of the year, but I'm not sure that we're done on this correction yet. Like, it could reset the path here. I'm still expecting it to hold here and we rally. We kick off the Santa rally here. We're getting later into the month here. Don't have long to make the low and kick off the Santa rally. NASDAQ did make a lower low. So we've got a divergence here between S&P and NASDAQ. That was a lower low. You know, on S&P, we have this uptrend going. We have a downtrend going. To make a reversal, we need to find a low, break a higher high, get above this resistance, get above the 618 retrace of the whole big move, and launch it off. So you go grab the high, go grab the low, 618 hanging out right there. This is the resistance that we need to break through. Look at that little head and shoulders thing. Now, if you look at the S&P 500, there's a nice big fat head and shoulders cooking in here. And I need to turn off that algorithm right there. So it depends on how you throw it up in here. Kind of cook this up. If this plays out, we could see a bigger correction take hold. Could take us on back down to 63 area. Just got to be careful, everybody. That would be pretty extreme. But it's sitting there. So if we break through that uptrend of lows, watch out for something down around this area down here. Yeah, I've got my alert sitting down there at 62.70. Thought that's where we might come down to. And look at that. Funny enough, it lines up with that back there. We didn't go that deep back here in September. Now we may come back and revisit. It's interesting to me, I think, how the price patterns just kind of lined us up. Now, Russell also made a lower low. This is where a lot of the bankruptcies are actually crapping and happening. Zoom on out. This thing's just been grinding here since September. Grinding. Tried to break out. Nope. Trying to retest. May have to come back down. We may have to come back down to this area right around 22 before we can go on up to 26 right there. So if the correction kind of takes hold a little deeper, we may see this back down here, build some strength, and then get that rally into the year, possibly early into next year. I see a lot of people talking about how Trump's going to guide the market, and we're going to have like this, probably need a little correction here so that they can ramp it up into the midterm elections and everything will be great and get rid of, all the blah, 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 blah. I don't think they have that much power, but that's giving a lot of power to people that don't have that much power. Great narrative, but I just don't see it cooking. This starting to really stretch this right shoulder and make it not look like this is what's happening. But still intact at this point. We still have the bigger, we get the little shoulder, the big head, the smaller shoulder. If this pops, we can see a move up in here. If this fails, still looking for that dip down in the 50s. And low oil is kind of one of the things I need. Low oil prices. But you know what's funny is I saw over the weekend a research on 150 years of tariffs. Every time that we have brought tariffs, it results in less local jobs. They're not protection, they're protectionist, but it destroys demand by having tariffs. The more tariffs you raise, the more demand is destructed. The result is lower local jobs and deflation. Totally counterintuitive. So while the Fed is trying to fight this all with, interest rates, it's kind of funny that Trump is the actual historical results of tariffs are completely opposite of what Trump is trying to accomplish. Lower employment, lower prices, lower demand, suffering economy is all 150 years of tariffs have proved that happens over and over and over. So it's exactly what we're seeing. Gold could not get the pop. Now, right now, that's a 1. This is a possible. If you want to hold on to it, you got in the gold rush trade, there is potential that this might pop. But it overlapped right there. Now, overlaps are okay in futures, small overlaps. But it's not crystal clean price action. So if that happens, it's like, is that the 1 and we get a 2 wave, a second wave retrace, and then we get the 3? Or is that not really what played out at all? And we got a 3-wave A, a 3-wave, we're working on a B, and then we get a C. It could be part of a bigger, this could be the A, this could be the B, and this could be a C back up here again of a longer This would be the A, this would be the B, and then we get a bigger C sometime out, maybe early next year. So this could be what we're cooking. I don't have a clear path. Trying to guess the path in a bunch of corrective price action is very difficult. This did touch the 618. That would be very classic to either a 1-2 or an A-B. Excuse me. If it is an ABC, that C could push it right back up here and then result in a big down, which would mess with a lot of people. Bitcoin, we already talked about touching the ideal support. Potential for this to get, and with these lower highs, as long as we keep doing that lower high thing, we're probably going to touch down in here, that 90 to 92 area, possibly down to 89. I can make a case for getting on down lower. I'm seeing a lot of bearish people calling for a touch of 80, but I just don't see that actually happening right now. I can't make the case for going all the way down to 80. I mean, it could happen. I just don't see it very likely. I just don't see it very likely, especially since we haven't hit the extensions here in a very enthusiastic way. So I just don't see that actually playing out. I was trying to make the count work for that, but this looks like we're wrapping it up sooner rather than later. Sticking with my 92 being support. Ethereum, if we can hold on to this right here, that can turn and go. We break up through that trend line, back test it. That's go time right there on Ethereum. NKD still looks like we're gonna get a bigger flush back down here. Could be done. We could be first move up, retrace, holding, and break out, but it just, I'm always the skeptic here. Dollar, this is one to watch. If we break back above here, it's likely we're going on up to 102. And when we get up to 102, that's going to start the stop out, and we could see a breathtaking pop in dollar. UUP, I don't know the level on UUP that corresponds to 102 on the dollar. So watch the DXY. If you believe that we're going to get the squeeze, you could go long here. We're not talking crazy numbers. A few bucks. Maybe up to 32, 33. It's not a giant mover. It's not like you're going to make 10,000% return. Apple. This sure does look like we've got first move down, a retrace. And we're setting up for a little deeper go. But as long as we can hold on to this uptrend line of lows, we still have these higher targets up here, like 300, 292, 300, 300. Amazon almost down to the target there. If we can hold it, it can be bullish. If we don't hold it, roadmap line test, downtrend highs test, and we don't hold that, we can go deeper. So not really magic. That's just playing out. Google, probably, like I keep saying, probably going to hit 304, maybe 337 above that. Meta has almost touched the ideal spot here. Put me alert here. I want to see that just a little bit lower. You know, this could be it. If you're going to kick yourself later for missing it, might be time to start building position. Then we're going just a little bit lower. And then if we do that bounce right there, you see this played out and went fast on the C correction there. It's absolutely beautiful correction. This plays out, You could be looking at a big long run, and we're not going that fast. It's probably going to be like this for Meta. Maybe even slower. Maybe something like that. Maybe out to 27 before we get up in that area. Could go faster, but probably going to go, you know, that's kind of its climb rate. Look. See over here, the climb rate. Bring that over. Yeah, I'm even still aggressive for the climb rate. It could be like this. 27. Microsoft. Still expecting that to, that's the absolutely beautiful correction target right down in here. I want to see it get that one more little push. That's what it needs to clear this up and be able to go higher again. Retest the breakouts. We can go on up, test 565, maybe something crazier to the upside. Now, if we don't hold that, though, we could be in for a bigger, deeper retrace like Meta. NVIDIA, still struggling here. This really looks like it needs to dip down in here and test this, but we're holding on to the uptrend of lows so far. Holding on to the uptrend of lows so far. Let me clean off a couple of these fib lines back here. Right now, we're holding on to that. As long as we hold on to it, still looking higher. If we break below it, roadmap line and breakout retest. That's kind of your level right there. That line is the level. Goes up every day. Get below it. Get below it. And if we get below that, we could go on a deeper retrace. Tesla. That could be it. That hit the ideal proportion there. Look at that. A, B, C. That was it. 1618. Beautiful. Absolutely beautiful correction right there. Proportions were a little weird. But that was it. Didn't have to hit the roadmap line. I like it better. There's more support. Like it's like a bigger, more energetic bounce if we actually hit that, but we didn't. So we're looking for this to break through a 618 level, which is right up here at 435. We get a daily close above that. It's on like Donkey Kong. We're probably going to see this rally right on up here, back to the all-time high, 44, 497 area. And that can kick off the bigger run on up here, 560. I've been talking about for months, it feels like. Netflix has split. And we'll see what happens. Splits have not been kind to most companies. People don't know. We're gonna look at this. They're like, well, Netflix was like 1,200 just the other day. Now it's at 110. That's horrible. Sell it all. It's just the psychology of it. Down 90%. Whether it makes sense or not. All my drawings are up here 10 bajillion, 10 times higher. Welcome to the split on Netflix. Still believe we can come on down right in here and find support. See what happens. ESLT needs a hit. HWM. Format Aerospace also needs a retrace. Jazz. Wow. Nice pop, but this has been a decade-long consolidation here. It's a big consolidation, but that's not a trend. So I'm not jazzed up on jazz. Worship. Worship. Looks like a new IPO. Nothing to see here. ONC. Wow, what a swing. I watch for that to come back down, hit the 1618. Classic price action there. Bounce, did the roadmap bounce, popped up, got the entry, retraced, popped up, found resistance at the 1448, retested the breakout, pushed on up, hit the 1272, retested the 1448, pushed on up, couldn't make it, consolidated, and then popped the 1618. This is classic for running out of energy. It's possible we get on up to a 200%. But then retrace the whole thing. So be careful out there on the ONC. Google, already talked about, probably going higher. Zyme, Works, pharmaceutical. When pharmaceutical stuff makes the top, for gosh sakes, be careful. That's usually a sign of a problem, or at least the market waiting for something. And we may just be waiting for all the data from the BLS. And when that comes out, we could see a bigger correction. So ALB still has this zone to work through. If we can get through it, kind of clear it up for going much higher. They have a big potential for lithium production. But we'll see. Like, I still believe they can be up here like 800, but gotta prove it to me. Baba. So we're still working on probably coming back to the roadmap line, despite the bullish potential. Nice. I'm not sure that's the bottom yet. Be careful. SPRB. That needs to retrace. Another little reverse split. Dumpster fire. Be careful. C limited. Yep. Expected that retrace. May come back down to 125 area. We could hold in here where we are, but we may come on down to that 125 area before we get the next bounce higher. And if we break through the, we're already pushing through the uptrend of lows, so be careful. If we break through the 125 area, it could go deeper again. SQM. This is an interesting chart. Here's the low, here's the high. 618 retrace. If you're a believer that this is a measured bounce, we could be looking at 215 on this target up here at a minimum. Zooming out, looking bigger picture. That's a nested 1-2, 1-2. We could go much higher than that. Although this, yeah, that's a lot of potential for that right there. Interesting. Another chemical specialty. So that could be a pretty bullish one right there. Remix, Vanek, rare earth metals. Yeah. So the potential's up in here. Cocoa is gonna be, come on, cocoa. Vital water. Yeah, it's just kind of running higher. I don't have a lot to say on that. Just keeps doing roadmap bounces, so watch for the retrace. See when resistance there. Decliners, Lily. Well, found resistance. Watch for the retrace back to the roadmap, or back to the breakouts before we can push on up to the 1272. Now 1272 up around 12 or 1100. Dell got whacked back down. Looking for this to hold in here and turn higher again. Race. Yeah, I still think it has an upside date with that 400 to 450 area. I mean 440 to 450 area. MSTR still pushing lower. We can go down to 180 or even down to 150. This could easily be where we're heading. I'm going to draw these bubbles because these are the next levels. And we get below that. That can be where we're heading. Be careful out there, everybody. Arm work. It's an arm work shirt I got on. $5 shirt. They separated the shirts from the venue management business. So Armark is now just a venue management business instead of, restaurants. I guess they have it. So they manage like stadiums and stuff like that. Contract with universities and bowling arenas and civic coliseums and stuff like that, and run the. And they separated out their uniform stuff for Veritas. I don't even know what the ticker for that one is anymore. Veritas? No, it's not advertising. It's not the Indian company. I don't even know. Veritas? Yeah, I have no idea what the ticker is for that clothing. They used to do, they spun out their uniform and broke it off into its own company. So, watch for coin to hit the support zone. It's an absolutely beautiful correction. Right there. MSTR tied to crypto. MSTR doing the same pattern we did right here. This is what I warn about on MSTR. This A, B, C, yikes. This is when crypto topped out, which eerily looks like what happened this year. That's a sign that, we topped out in crypto right here in October. This topped out a little early. This could do a bounce, and then if we're in crypto winter, pull them back. And somebody on Friday was asking, what's crypto winter? It's when we spend a year in a correction for crypto. Happens right now it happens every 4 years. We spend a year correcting, usually a 70 to 80% drawdown in Bitcoin. That would put us back in the $40,000 area at this point, 30, 40,000. It's real possible that that's what's cooking. LEU back to the roadmap line. Presents a new opportunity. If this can bounce, set your alert right up here. TSM. Probably coming back to the roadmap line would be my guess. Doesn't have to, but that would be my guess. PLTR. PLTU came back to the roadmap line, so can PLTR do it? I don't know. Maybe. CRDO. Probably come back to the roadmap line. Oracle. Probably going to retest the breakouts. Would be my guess. If we can hold it, positive. If we don't hold it, watch out below. Come back down to 120 area. Reddit holding on to the roadmap line so far. That's 5 up though. If we don't hold the roadmap line, could be set up for a retrace back down in this 80 to 100 area. So we need to hold in here. If we don't, watch out below. That's kind of the way. Right now it has a roadmap line bounce potential, but if we don't hold that gap right there, it's going to test that gap. If we don't hold that gap, probably going to come on down. Right now we're testing the top of it. If we can hold it, that's great. If we're going higher on Reddit would look something like 300. TECL, roadmap line. LB, roadmap line. WDC. Got upside resistance, 220, 5 and roadmap line. ERT. Watch for the retrace. Hood. Watch for the retrace. I left off the setups. Let me go pull those up really quickly. See my daily chart setups. That would be turn this on. ELVN. Here's the high, here's the low, there's the entry, 26 target, no history on that one. LCMB. Last one worked out. Let's see. Here's the high, here's the low, there's the entry, and 1678 target. Wow, 93%, 5.6. It's pretty smoking on that one. Next one, NHI. Under 30 trades doesn't mean anything though. So this one's got 30. That has to be, I typed that in wrong. NHI. Said one thing, pushed a different. That's why. Dyslexia kicking in right there. 81.85 target, 40 trades, 77, 1.5. All pretty good. Pretty good numbers. And then last but not least, SRRK. There was the high, here was the low, there's the entry, and 45.90 target. No statistical significance there. So look at the outlook for today. If we can hold on to that retrace, which so far so good, break back out above the high, probably kicking off Santa rally here, or at least a rally into December. So this is the important level. 67.20 on the futures. Yes, if we hold on to it, probably going higher. If we don't, correction's not done yet. That's the bottom line. I'll be on Market Masters with Jack Carter at 11:30. We usually talk income opportunities. My income opportunity account hit new all-time highs here. Year to date, 34,000. Not too shabby. Not too shabby at all. If you want to know more, come see us at Market Masters. Have a great day, everybody. See you again tomorrow morning. Same bat time, same bat channel, 9:15 tomorrow. We'll do it again. Hunt for opportunity. See you later.